good morning, good evening, good afternoon, students and traders all around the world. This is FXFreedom broadcasting you live on YouTube. Hello Dancy, how are you? And today it's Tuesday, right? Tuesday, 16th of August. Remember, this is the foundation course. Hello Mattia, how are you? This is the foundation. Oh, Mattia, I have, you were asking me the time, right? So give me a second, Mattia. Okay, everybody, is going to be 2 p.m. GMT. Okay, check your schedule. Okay, if you live in New York or whatever, Texas, okay, or if you live in Brazil, whatever, it's going to be 2 p.m. GMT. Okay, Saturday, August 27, half day. You are going to work, everybody. It's not going to be me talking to you. You are going to work. Makes sense? It's going to be a workshop. Okay, that being said, hello Ala, how are you? Hello Clara, how are you? Remember, everybody, trading is a learnable skill. When we learn in the correct way the three pillars. Pillar number 1 is the market, pillar number 2 is the strategy, and the third one, the big one, is the trader. Talking about the trader more in the Forex course 202. And remember, you are going to graduate from this course when, and it's going to take approximately 1 year, if not more. You are going to graduating from this course, everybody. Number 1, when you have your chart set up and ready for trading. Number 2, you have your strategy in place. You understand why you win, why you lose. And number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction, right? Long or short for the week. Mattia is asking, I have one question. Can low and high be same candle? No. The answer is no. Okay, it's a sequence. Some people are drawing high and low on the same candle. I don't. Answer no, okay, if you ask me. The answer is no. Thanks for the great question. Moving forward, everybody, what do champion beginner traders always say? Champion beginner traders always say that I'm not going to live and die on a trade by trade basis. And of course, this is a quote from Mark Douglas. Remember, 90% of traders lose money in the Forex market worldwide. This stream is no advice. You know, we are not telling you what to do, where to do, how to do it. We are here to educate. And either way, don't trade with money you cannot afford to lose. And remember, if your way is not working, why don't you try ours, right? And for homeworks and questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. So today we have rules for trading the Contrarian Fibonacci, everybody. And we need to finish from yesterday, right? Okay. Now, one more time. After the stream yesterday, some of you sent me an email and were asking me, oh, why are you against those guys? Oh, you are not fair, everybody. Make sense? So, not to waste too much time, just to clarify one more thing, okay? So, just to clarify one more time, I'm not against them. I have nothing against, make sense? As a matter of fact, I know some of them too. You know, those are great guys, and as we said yesterday, they are honest and they're giving you a chance, okay? So I'm not against them. But when it comes down to trading, and when they have different rules, okay, whoops, not this one, and they have different rules, market conditions or trading conditions, not market, trading conditions, one more time. So we can separate, right? We can do something like this. We have two rectangles, and we have here the good points, right? Those are the pros, right? Okay, and then we have the bad points, right? Those are the cons, right? Good points, bad points. So one more time, okay, good. Oh, they are honest. So they are honest, right? They are honest. They are honest, they are giving us a chance to trade big money, right? They're giving a chance to trade a big they have great support, right? They have great support, they have great stories, they have and all of this, right? Agreed, everybody? Okay, those are all the good points, you know, and this is all the good stuff, and why you should go with all of them, right? But here, you know, when you put your money down the line, you know, and you invest the money, you know, they have one more time, right? Until you are a skilled day trader, you know, trading on the 15-minute chart, whatever, right? On the just an example, 5-minute chart, 15-minute chart, you know, 30-minute chart, then you have no chance. You have no chance of succeeding. Make sense, everybody? And this is a statistical fact. Okay? So some of you send me an email, oh, why are you against them? You know, everybody, do a favor to all of us, talk to those guys and do like I do. Ask them, you know, bother them and say to them, we as traders, we want better trading conditions. Okay? So don't tell me, I mean, this is just a conversation, right? Just an example. You know, what would be a better trading condition? Well, don't give me the 30-day challenge or the 60-day challenge, everybody. Make sense? Now, this is AUD/CHF daily chart, and I've seen charts moving sideways in consolidation for 3 months. Make sense? But this is right now, you know, forget about what I saw. This is right now. This is AUD/CHF daily chart, just an example. We're going to talk about lower time frames too. And let's say that here is the market, you know, it was the counter trendline break, you know, and this was the bullish candle, and you entered in here. Make sense? You entered in here, and those are days, everybody. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28 today. If you are not a skilled day trader working on the 15-minute chart or the 5-minute chart or whatever chart, and AUD/CHF is just an example, I can show you more. You know, if you are not skilled enough for you to, this is just a representation of what we're talking about. If you are not skilled enough to make profits in here, you have just 2 more days and you are going to lose your money. Does this make sense to you? If you would have a proprietary trading firm and we have a partner from Australia who would say, no, you know, take it as much as you need to, you know, if you need 2 years to make 10%, let's beat, you have 2 years. We have no time. Make sense, everybody? So we are trying to influence a little bit, and as I said yesterday, I'm talking to some of them, you know, and they're still, no, we don't want, because, you know, we get into discussions and conversations, but it doesn't change the fact, everybody. Makes sense? You know? So tell me, everybody, this is the 2-hour chart, right? Still AUD/CHF. This is the 2-hour chart. Another example, right? Now, let's say that you have a job and a family, right? You want to be a trader. You have a job and a family, and, you know, you come back home at 6 p.m. and after you have your dinner and you take a shower and play with your kids, you know, and you say, well, now I'm going to trade. But some of the proprietary trading firms are telling you, unless you pay us more money, you cannot hold your positions overnight. So you're going to enter in here, buying the market, and it's 6 p.m., 8 p.m., 10 p.m., the market is going to reverse, and you must close the trade. Make sense, everybody? Which one? I don't know, I didn't check, but I know from traders that some of them have different trading conditions. And even though if you are on a 4-hour chart, or even if you are on the 2-hour chart, everybody, the market can still go sideways. Make sense? Consolidation. And if you are not skilled enough, one more time, right, then you have a problem of the broker who is going to eat a negative swap every single night. Make sense, everybody? So in conclusion, not to be a class about proprietary trading firms, you know, let's try to talk to them, you know, and maybe one day some of them are going to say, okay, we don't have the 30 days, the 60 days demo account anymore, right? Okay, you have all the time that you need and you can have your position opened over the weekend. This is the acceptable risk over the weekend, you know, and you can have your positions, then the story is going to change. Okay, Alex, I'm sorry I don't speak. Hello, how are you? Okay, everybody, the angry guys who are sending me emails, oh, why are you against them? I'm not against them. As a matter of fact, I know some of them. Make sense? Now, we were talking about yesterday how to trade the Fibonacci, right? And we were talking about that we are going to split, okay, the risk. And so this is the chart, everybody, right? Okay, now this is the chart. We're going to delete this one. Let's say that back in time, okay, let's say that we have entered in here, okay, entered in here. This was our first trade, makes sense? And just an example, let's say that we have an account text, let's say that we have an account, so account of $1,000, right? Okay, just an example. Why 1,000 is just an example. Okay, so we said we're going to split the risk in 5, just an example again. So okay, risk per trade in monetary terms, risk per trade in, so risk per trade, right, it's 1%. Okay, risk per trade, so risk per trade total on the pattern traded. On the pattern traded is 1%. Okay, risk per trade total on the pattern traded. What is the pattern? The daily Fibonacci, just an example. The same goes for the 4-hour chart, not a problem, or the 2-hour chart, 1%, right? So how much is 1% in monetary terms on $1,000? So 1% in money terms equals to how much, everybody? Come on, take your calculators. Hello everyone, please let's all try to like this. Thank you very much. If you are giving a thumb up, you are helping us to deal with the YouTube algorithm, everybody. If you find these classes valuable, or if you like those classes, if you thumb up, okay, the YouTube algorithm is going to push in these videos, these streams in higher ranks. Mattia says 10, right? So 1% it's 10, okay, $10, 10 USD. 10% would be 100, right? Okay, it's $10. Maybe not enough, right? Maybe I don't have enough capital to trade, but let's see, right? It's just an example for you to understand, everybody. Samantha, 10. Yes, ma'am. Okay. Okay, everybody, let's set just an example, 10,000, okay? 10,000. If not, we are going nowhere, so it's going to be 100, edit label. Okay, boss, but I don't have 10,000. It's just an example. If you don't have, firstly, you should be on the demo account, not live, everybody. Ala 10, yes, sir. Okay, go on the demo account, put 10,000, so 1% is going to be 100, right? And I'm going to delete this one and delete this one. So, everybody, 1% it's 100, right? Now we are going to split this in 5. Make sense? So split the risk in 5, so equals to $10 divided 5, it's what? 20, right? 20 USD per trade on the pattern traded, right? And I'm not sure if we have enough money, but we're going to try to do the calculation. Any questions so far, everybody? Is it clear what we are doing right now? We said that we have, it's just an example, go on the demo account, open $10,000, and let's say that we are going to risk 1% on this pattern, right? And yesterday we had a class how to trade the Fibonacci's, and we tried to explain to you that you want the market to go against you. This is good news, not bad news, right? And it's a different way of thinking from what we are used to think. So we are going to split the risk in 5. 5 times 20 equals to 100, right? Okay, now our entry is, so entry, right? Entry equals to roughly, what is going to be, entry equals to, so we are entering in here somewhere. Which one? Black one? Transparency. Okay, like this. Maybe violet one, so we can see it clearer. Okay, we entered in here the violet one, everybody, and our entry is at 0.71460, right? Okay, question, where is the stop loss going to be? Everybody, where is our stop loss? We are going to enter multiple times if the market goes against us, right? Make sense? There is no right, no, somebody's asking me, there is no right or wrong. This is just a simplistic approach, everybody. Make sense? This is just repetition, repetition, repetition. Up in here, you cannot, one more time, everybody, why it is wrong for us to enter 1% in here? Type in the chat who learned yesterday why it is wrong to enter with 1% risk up in here. Stop loss below DA, yes. And again, somebody's typing on the other streaming platform, oh, but we are going to make just, breadcrumbs, right? Professional traders, we manage risk first. We are not chasing the money. Because risk reward, exactly. We risk more, exactly. Exactly. Congratulations to everybody. So my stop loss is going to be somewhere down in here, right? Okay. Now you have something like this, okay? It's an Excel formula, it's nothing special. If you can build it for yourself, not a problem. You know, if you don't have it, send me an email or something, I can send it to you. So we're going to buy the uptrend, you know, our capital is 10,000, 1, 2, 3, right? Now, there is no right or wrong. Now, this is just an example of the formula. So, is this okay? Now, here we have AUD CHF, right? Entry price we talked about is, so when you do the Excel calculation, no comma, so it's 71460. 71460. 71460, it's our entry price. Anyway, is this okay or is there something wrong, everybody? This is an automated Excel, okay, just for bunch of formulas, but you know, I put 10,000, this is my demo account, and am I risking the correct amount in monetary terms or am I risking too much? Exactly, congratulations, Matya. 0.2. You need to pay attention. So now we are ready. Okay, so 0.2, and entry price I need to enter manually. You know, stop loss price we said that is going to be somewhere around 63534. 63534. 63534. 63534. Enter. And see, everybody, we don't have enough money, we don't have enough capital. So if I'm going to risk this one on the AUD/CHF on the daily chart, right, we don't have enough capital. Make sense? What should we do? Well, it's up to you. It's up to you. Okay, so we can go on the lower time frames. Make sense, everybody? Or we can, it's not a suggestion, I would not suggest you to do it, okay? Or we can increase the risk. Make sense? So what can we do? Let's say that it's 0.25, right? Still not enough, okay? So we're going to keep it at 0.2. And what is going to happen if we have $50,000? 50, 1, 2, 3. Okay, so now we can trade in here. The volume, the lots appeared. Okay, so on this particular trade, 10,000, it's not enough money to do this kind of trade. So just an example, just for you to understand how this calculation goes. Okay, we are going to trade on the $50,000 account. Still, we're going to risk 0.2. Okay, and then this is the volume, right? 0.01. So if this would be the entry and this would be the, so we don't have enough money, right? Edit label, not enough capital, not enough not enough capital. Let's put 50,000. Let's put 50,000, right? Just an example. Let's put 50,000. 0, 0, 0, 0, 0, 0. Okay, so 50,000. How much is 1% on 50,000? Edit label, split the risk, not this one. How much is 1% on 50,000, everybody? 500, right? 50,000 is 100%. 5,000 is 10%. Are you sure it's not 500, 1%? Matty, are you sure? It's not 500, it's 50. 50. 1%, 50. 500, exactly. So 500 divided 5 equals to $100. Everybody, this is just an example for you to understand the calculation. Makes sense? Then it's up to you how you're going to manage your business, how much money, how much risk. Okay, everybody? So here it's going to be, so if I'm entering in here, then this is my first trade, right? This is my first entry. I'm going to, this is my risk, right? And volume or lots, you know, volume equals to 0.01. Okay, everybody? And again, right? Again, you know, some of you are complaining, oh, this is not enough money for me. You know, some of you were, until yesterday, if you learned well, afraid, and you were stressed out, and you were frustrated because the market went against you. But now that we're giving you a solution, you know, now you are still complaining, well, but okay, you know, yeah, right, but if the market goes up, I'm going to make breadcrumbs. Well, what can you do up in here? Professional money manager. Read this sentence and play it, you know, for the next year. 3 times per day. You know, take your cell phone and record your voice telling to yourself, professional money managers are managing risk first. If I enter in here, just an example, if I enter in here like a crazy dog risking 2%, 5%, 10%, you know, I'm not a money manager anymore. You know, I'm a beginner trader with no experience learning how to trade. You know, some of you have enough experience, right? You stop telling yourself stories. Oh, I know what the market is going to do. Oh, I know what the market, I know this AUD-CHF is going to go up, right? You stop doing this, right, everybody? We don't have the crystal ball. Anyways, we are here, okay? And the market is doing this and sideways, and then the market still, you know, please God, you know, let the market go up or down, please, you know, and it's, so the market's still falling. Clara asked yesterday, how can we re-enter just when the market goes against me? And the answer was no, wait for the market to give you a simple trading strategy rules from yesterday, right? So we did our first trade, the market goes against us, it's no big deal. No big deal, we are not losing much. You know, we are really losing breadcrumbs, but then, you know, we are monitoring the market, and this is the counter trend line, you know, in here. And if I'm an aggressive trader, just an example, this would be another counter trend line. So this would be most likely, I should not break the tails and the wicks. So I have another entry in here. Agreed, everybody? Countered, so the aggressive one, right? You are going to see, everybody, it's not that difficult. Make sense? Simple trading strategy for the beginner traders and the intermediate traders. Counter trendline break. Okay, check. Past support. Yes, sir, we are at past support. Check. candlestick formations, yes sir, maybe not the best one. Check, stop loss goes below the A, okay. Now we are going to enter in here. This is the candle, right? Candle, 1, 2, candle, okay. This is the candle in here, so the number is entry at 0.69530. Stop loss is going to be the same, right? So 69530, 65930. Okay, so it's 65930. Okay, you do still the same. You can leave the first trade up in here, or you can change in here, but I'm going to leave it opened. So it's the second trade, AUD CHF. I have 50k, 1, 2, 3, 0.2, it's 100, okay. I'm going to enter at 0.65930, and the stop loss is going to be the same because the stop loss goes below the A, right? Agreed, everybody? So 63534, 63534. What just happened down in here? See in here, everybody? Our first trade risking 0.2, we are risking breadcrumbs of our account. We are not even risking 1%. But here the volume, the lot was 0.01. Now the volume, the lot's pushed to 0.04. Everybody, I want to hear from you. Type in the chat, I understand what we are doing, or type in the chat, no, I don't understand what we are doing. Somebody's asking on the other streaming platform, boss, why did the volume increase? Answer, because we have lower risk in pips. Everybody, if this is your first time with us, yesterday we are talking about the logic behind, okay, how to trade the Fibonacci's, okay, and yesterday we explained to you how risk relates to reward. Okay, everybody? So if you're asking yourself, oh, how come that we have bigger lots and bigger volume? Because the more the market goes against us, this is good news. And why is good news? What is the logic behind the good news? Because the more the market goes against, I'm going one more time, everybody. If the market is going to stop us out, we are going to lose the same amount of money. Make sense? If you enter here with 1%, of if you are going to do 0.2, 0.2, 0.2, 0.2, and if the market stops you out, you know, you're going to lose the same. Make sense, everybody? Yes, we are going to lose the same amount, but if the market starts to go up, what risk management strategy, this is really what you are learning right now, what risk management strategies is going to provide us more money, more pips? We are closer to stop loss, so volume is bigger. Yes, sir. Samantha, risk reward increases. Yes, ma'am. Closer to stop loss, risk, yes. Okay, everybody, makes sense? So we are going to enter in here. Somebody's like, oh, I'm happy. You should be happy, right? Everybody, once you understand, this is just an example. You have different risk management strategies. This is just one for the Fibonacci. But once you understand this, you really want the market to go against you. You don't want the market to just go up. In this case, right? And somebody says, oh, it doesn't make sense to me. It's pure math. Watch these lessons over and over and over again. Samantha is saying this is going to be great for my trading. Samantha, this is great for everybody. Because we as traders, we get emotional when we losing, when we are losing, you know. So it's a different mindset right now, everybody. What you are trying to acquire, it's an emotional skill. Make sense? And we are showing you the numbers. And this is good news, right? So we entered here volume clone, right? It's going to be edit label 0.04. Okay, and if we're going to lose, we're going to lose 20. I mean, now it's 100. We're going to lose 100 bucks in here, and we are going to lose 100 bucks in here too. But it's still breadcrumbs on a $50,000 account. Everybody, don't complain. Somebody's complaining, but I don't have that kind of money. Go on these smaller time frames. Find the Fibonacci on the 4-hour chart or 2-hour chart, and you can do the same. Make sense? Or learn, stay with us, and when it's time, just ask for, you know, what it's called incubation. Okay, and then we're going to connect with a partner of ours, and then it's between you and them. Okay, everybody, moving forward, right? Moving forward. So this is the market. I enter another, you know, another trade, and down again. Oh my gosh, you know, and here and here, and so here again we have another entry, right? Counter trend line break, candlestick formations, past support, right? The market made a higher high. So the time is moving, everybody. Okay, so here we entered, we did the same, we entered with the same calculation. So this was volume 1, here was 0.04. You know, we entered in here. What is this one? We entered in here 66540, 66540, another one 66540. We are still talking about the AUD CHF. We have 50k, 1 2 3, 0.2. okay, stop loss is the same, 63534, 63534, and entry price, something is not good, everybody. 63534, 63534. Oh, the price is not okay. The price is 665. Oh, not this one. Okay, up in here, 66722. 66722. Did I make any mistakes up in here? Oh, 0.03. This one is wrong, right? 65. It was 69. 69, everybody, not 65. 69530. 695. 69530. 69530. So it was 0.02 and now it's 0.03. Now makes sense. So this was 0.02 and clone. This was 0.03 this time. Okay. So as the more the market goes against us, everybody, the bigger is going to be the volume, the lots. Make sense? And if you want, right, we're almost out of time, so here would be another one, right? Here would be our last one. Okay, and let's do this one last time, everybody. Our entry is going to be most likely at the same place. You know, now here we have the confirmed C2. We're going to do this today or tomorrow, but candlestick formations, counter trendline break, one last time, 66200, 66200, okay, 66, and I don't have any more time, 66200, so I'm going to change up in here, 66200, and now we have 0.04. Here we have 0.04 volume, clone. So we have 4 entries. The market went against us, right? And let's put this down in here. Okay, just graphically. Now look what is going to happen. Look what is going to happen, everybody. Okay. So then finally, we don't have the crystal ball, but Fibonacci and structure and market wave. Finally the market, you know, it went up and now it reversed anyways, you know. Then it's all about trade management. So just graphically, 1, clone, 2. Okay, how much is just an example, but how much money in percentage, or how much money did we make with our last trade? So profit, right? You need to get skilled on the trade management too, everybody. Okay, so in this last trade, if we risk 100, just graphically, profit. So we are right now up in here. We are in here talking about up in here. We are right. Agree, everybody? This was our risk, just graphically, and the market went up and up and up. So this is 100, and this is up in here. We are just graphically, we are $200 in profit. Matty is saying, is the best to calculate average risk reward at the end? I'm not sure if I understand your question. Okay, now this one, clone, still 100 bucks. Let's color code differently, everybody. Background color. Okay. So here we have another 100 and clone. Right? It's just graphically. It's 150, right? More or less, everybody. We don't have time, makes sense, to go now into the details and to the pip. But just graphically, 150 USD. This one, it's at 100. Now this one, the first one, this one, right? Volume 0.02, clone, and background color. Maybe this one, orange, yellow, yellow. Clone, you know. So we are not making much with the second one, but we are still in profit, right? And with the first one, we are almost at break even. Samantha is answering you. Absolutely not. Mattia, before you take the trade. Every trade has its own risk reward, so we can calculate common average risk reward. Take profit and stop loss is same for all trades. Not true. No, it's not. Everybody pay attention on the Fibonacci. No, it's not. Green goes to green. Okay, green goes to green. But when the market falls to the blue, okay, then the risk reward You need to readjust, everybody. This is not like this anymore, goes down to blue, and if it falls to red, goes down to red. Okay, everybody, pay attention on this one. Okay, stop loss, yes, it's the same. Take profit, it's not the same. It's going to change according with the Fibonacci retracement and extension. Samantha is saying, if I understand correctly, always calculate risk reward at the beginning and you can see where you are based on where price is, but please check total risk reward first. Yes, ma'am. Congratulations, Samantha, you got it. Okay, you got it, Samantha. Absolutely, you must calculate your risk reward before. Okay, now maybe I got your question, Mattia. Okay, so the answer is no. Okay, don't do the average. Make sense, everybody? Don't do the average if you think that you're going to have the same volume. So I'm going to count volume number, trade number 1 volume, trade number 2 volume, trade number 3 volume, and trade number 4 volume. Okay, it doesn't work like this. Who knows why not, everybody? This is an advanced conversation, fair enough. Why you should not calculate the average risk reward, everybody? Who knows the answer? Why should you should not do this? 0.01 plus 0.02 plus 0.03 plus 0.04, and then I'm going to divide by 4 or 5. Why you should not do this, everybody? Type in the chat. This is an advanced conversation. Yeah, but you are going to make money still. You're still going to make money. Yes and no. Yes and no. Yes and no, everybody. Dance is saying, who wants to join community with Mattia and I? We discuss about lesson setups, makes, homeworks, Fibonacci, and so on. Everybody should join. This is a community. Everybody, if you're going to average, then, you know, let's do the... Do we have time? Yes, we do. You may lose more than 1%. This is one. This is one. Samantha is correct. You may lose more than 1%, but also on the profit side, everybody, look what is going to happen. If I go 0.01 plus 0.02 plus 0.03 plus 0.04, and then I'm going to divide by 4 equals 2. So 0.01 plus 0.02 plus 0.03 plus 0.04 equals to 1. So it's 0.10 divided 5. I'm sorry, not 5, 4. So 0.10 divided 4 is 0.02. See, everybody? It's 0.02. If you put 0.02 equals to 0.02, if you put here 0.02 instead of 0.04, how is this going to affect your profits? See, everybody? Mattia, does this make sense to you? The more the market goes against us, the bigger should be the volume, the lots. Why is that? Because the more the market goes against us, this is Fibonacci theory, the higher the probability of reversal, and also we have a confirmed C. So this averaging, it's a strategy, everybody, but in practice, you know, I cannot say it's a rule, it's not, but you know, why would you do this? Make sense, everybody? Why would you risk the same in monetary terms or in lots, in volume? You have, no, everybody, there is no right or wrong, but you have John and he's entering here with 0.04, and you have Joanne and she's entering with 0.02. Up in here, believe me, John is going to be more satisfied than, makes sense, everybody? It's not wrong, it's just a different way of risk management. Julius wants to join, please, Nancy and Mattia. Overlaid the off account. Okay, everybody? Makes sense. Okay, everybody, I'm sorry we don't have time. We're going to this tomorrow. We're going to talk about how to trade the Contrarian. Okay? And remember, you need to have, so this is a tool. You can do it by yourself. It's no-brainer. Okay? And Saturday, August 27 is going to be 2 p.m. GMT. Check your time. Some of you are from USA, some of you are from Europe, some of you are from Brazil. Okay, 2 p.m. GM time. It's going to have a day and you are going to work. You are not going to just, it's not me talking to you, you need to work. Okay? And remember, I'm going to give you my system. It's not a holy grail, you know, you are still going to have losing trades, but it's making money. If you are going to listen to the system. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade for freedom. Don't trade for money, trade for freedom.